Trend analysis is like being the stock market's weatherman. You try to predict if it's going to be a sunny bull market or a gloomy bear one, and then you ride that wave until the clouds roll in. It's like surfing, but with stocks. The idea is simple. If you swim with the current trends and not against them, you're more likely to find the treasure chest of profits. Think of it as financial history repeating itself. Traders believe that what happened in the stock market's past is like a sneak peek of the future. There are 3 flavors of trends: the quick snack, short term, the full meal, intermediate, and the all-you-can-eat buffet, long term. A trend is basically which way the market's wind is blowing over a certain period. Trends can go up, down, or sideways like a financial roller coaster. There's no stopwatch to time how long a direction must last to be called a trend, but generally, the longer it sticks around, the more it's worth noting. Trend analysis is like putting on your detective hat and trying to spot where the current trends are headed. It's a bit like playing connect the dots but with market sectors. You try to figure out if what's happening in one area will create ripples in another. Despite all the data crunching, remember, trend analysis isn't a crystal ball. It's more like a weather forecast, sometimes spot on, sometimes not so much. So, don't bet your grandma's savings on it just yet. There are 3 main types of market trend for analysts to consider. First on is upward trend. An upward trend, also known as a bull market, is a sustained period of rising prices in a particular security or market. Upward trends are generally seen as a sign of economic strength and can be driven by factors such as strong demand, rising profits, and favorable economic conditions. Second is downward trend. A downward trend, also known as a bear market, is a sustained period of falling prices in a particular security or market. Downward trends are generally seen as a sign of economic weakness and can be driven by factors such as weak demand, declining profits, and unfavorable economic conditions. And the third one is sideways trend. A sideways trend, also known as a range-bound market, is a period of relatively stable prices in a particular security or market. Sideways trends can be characterized by a lack of clear direction, with prices fluctuating within a relatively narrow range. Alright folks, before we dive into the deep end of data analysis, we've got to pick our pond. Maybe you fancy the fast cars of the automotive sector or the lab coats in pharmaceuticals. Or perhaps you're a bond market enthusiast, ready to spy on those investments. Once you've picked your playground, it's time to get nosy about how it's been doing. It's like stalking your ex on social media but for a market sector. We check out how it's been influenced by the neighborhood gossip, maybe a scandal in a related industry, or some juicy new government rule. Analysts then grab all this gossip, stir it in a big cauldron, and abracadabra try to conjure up a prediction on where the market is heading. It's like trying to predict the end of a soap opera. Will it be a dramatic twist or just another cliffhanger? Who knows, but it sure is fun to guess. Trend traders attempt to isolate and extract profit from trends. There are many different trend trading strategies using a variety of technical indicators. Moving averages. These strategies involve entering into long positions when a short-term moving average crosses above a long-term moving average, and entering short positions when a short-term moving average crosses below a long-term moving average. Momentum indicators. These strategies involve entering into long positions when a security is trending with strong momentum and exiting long positions when a security loses momentum. Often, the Relative Strength Index, RSI, is used in these strategies. Trend lines and chart patterns. These strategies involve entering long positions when a security is trending higher and placing a stop loss below key trendline support levels. If the stock starts to reverse, the position is exited for a profit. Indicators can simplify price information, as well as provide trend trade signals or warn of reversals. They may be used on all time frames, and have variables that can be adjusted to suit each trader's specific preferences. Usually, it is advisable to combine indicator strategies or come up with your own guidelines, so entry and exit criteria are clearly established for trades. Each indicator can be used in more ways than outlined. If you like an indicator, research it further, and most importantly, test it out before using it to make live trades. Say that an investor is considering buying shares of a particular company, and they want to use trend analysis to determine whether the stock is likely to rise in value. To conduct their analysis, the investor gathers data on the company's financial performance over the past 5 years, including its revenues, expenses, profits, and other key metrics. They also gather data on the overall performance of the stock market and on the company's industry. Using this data, the investor creates charts to visualize the trends in the data. They notice that the company's revenues have been steadily increasing over the past 5 years, and that its profits have also been trending upward. They also notice that the stock market has been generally trending upward over the same period. The investor then uses linear regression to model the relationship between the company's profits and its stock price, and they find that there is a strong positive correlation between the two variables. This suggests that as the company's profits have increased, its stock price has also tended to rise. Based on their analysis, the investor concludes that the company's stock is likely to continue trending upward in the future, and they decide to buy shares of the stock. Picture a trend as the heartbeat of the market, pulsing up and down over a period of time. Just like in a dance-off, markets can groove upwards, hello, bullish, or boogie downwards, watch out, bearish. There's no stopwatch timing these moves, but the longer the beat goes on, the more everyone starts to notice the rhythm. Trends are spotted by drawing our very own dance lines, known as trend lines, tracing the market's fancy footwork of highs and lows. Now, trend analysis? That's where we put on our detective hats and dive into the data dance floor. It's like being a financial Sherlock Holmes, looking for clues in the patterns to make smart investment moves. Whether it's a stock or a bond, we study their past moves to predict their next jig. There are many ways to shake it on this data dance floor, from technical analysis with its snazzy charts to fundamental analysis, where we check a company's financial pulse. So, whether you're a wallflower or the life of the investment party, remember, subscribe to our channel, or the stock market might not be your best friend this year. We wouldn't want grandma's savings to pull a Houdini and vanish, now would we?